You've decided this is the year that you will become a homeowner, so you start looking online for houses, right?
It's actually not correct.
One of the biggest myths to buying a home is that the home search is the first step, when in fact there are multiple steps to be taken prior to this in order to really be ready to find your new home. Today I am sharing my top 10 buyer tips plus 2 bonus tips to becoming a smart home buyer, ultimately leading you to the dream of home ownership. Buyer tip number 1, start saving early. The down payment on a home purchase is typically between 0 and 20% of the purchase price, depending on the loan program that you will get into.
Wait, what?
Yep, you heard that correct. Good news, right? It is a myth that you need 20% down to purchase a house. A few loan programs such as the USDA loan, which is applicable here in Yamhill County, the VA loan, or specialized first-time home buyer programs do not require any money down. Each do have specific qualifiers, including income or prior military service or property locations, to name a few, that you would need to fall under to qualify for. There is a federally backed FHA loan that requires 3.5% down, and there are conventional loans that allow for a minimum requirement of at least 5% down. Down payment funds can be monies that you have saved. They can be from bond programs that contribute money on your behalf if you qualify, such as the Genoa program. And another avenue of money down can always be monies gifted from family to help contribute towards your purchase. Now, one thing to note, if you are using gift funds, these monies cannot be monies that need to be repaid back to your family members. They do truly have to be a gift of funds. Along with saving for your money down, one thing that buyers often forget is to also save for the closing costs. The average amount of closing costs needed for a purchase is typically between 1 and 3% of the purchase price, depending on your loan program and who your lender is. Closing costs are inclusive of lender fees to process the loan, titling fees, appraisal costs, and property-specific costs such as prepaid property taxes, homeowners insurance, and any upfront dues if the home resides in a homeowners association. You will also want to save for your home inspection, which here in Oregon locally ranges between $400 and $1,000, depending on the type of inspection or inspections that you choose once you have a house under contract. To provide an example, as mentioned in one of my previous videos where I talked about the cost of homes here in Yamhill County, the median home price right now is sitting at about $446,000. Using this as our purchase price, if you qualified for a standard FHA loan, which again, this is 3.5% down, plus saving for closing costs of 1 to 3%, you would need to save about $20,000 to $29,000 for closing. Buyer tip number 2, know your credit score. Credit scores range between 300 and 850. There are 3 nationwide credit bureaus here in the United States, Equifax, Experian, and TransUnion. When qualifying for a mortgage loan, your lender will pull credit scores from all 3 of the bureaus, and then they will use the middle ranking number. Most loan programs require that you have a median score of at least 640. Many credit card companies and banks have started providing credit scores to their customers, which may be one avenue that you could obtain this information. There are also free credit scoring sites such as creditkarma.com that you can also obtain your scores from. In addition to checking your credit scores, it is also a good idea to receive a copy of your actual credit report to verify that all the information that's been provided about you and your history of payments is accurate. To note though, the credit report will not have your credit score on it. Now, if your credit score is low, many home lenders will offer guidance to you as to what you can do in your personal credit scenario to work to increase your score over time that will help you qualify for a loan. Buyer tip number 3, make sure your taxes are filed. Lenders require copies of the most recent 2 years of tax returns for loan qualification. Not having the most recent years filed most often will pause your ability to qualify for a loan until those are filed with the IRS. Buyer tip number 4, keep finances as low as possible. Try not to finance anything new prior to buying a home. Obtaining new credit cards or loans can negatively affect qualifying for a mortgage and/or how much you qualify to purchase. The less debt you have, the better. Buyer tip number 5, gather your paperwork. When qualifying for a loan, a lender will require certain documents for review. Having these documents together, and more preferably in an electronic format that you can upload directly into the lender's portal, will help alleviate delays. You will want to have 30 to 60 days of your bank statements and/or any investment accounts that your closing money will be coming from. You will need to have your last 30 days of pay stubs or a year-to-date profit and loss if you're self-employed. The lender will ask for copies of your tax returns and W-2s or your Schedule C if self-employed. If you're currently renting, you may be asked to provide proof of your last 12 months of rental payments. And if you're obtaining a VA loan, you will need your DD-214. Each person in their situation are a little bit different, so a lender may ask for additional documentation specific to you and your scenario. A few examples may be a divorce decree if you're receiving alimony or child support, pension or disability letters if you're receiving income from either of them, or payment plan documentation if you're paying back student loans. Being prepared to have access to requested documents will help ensure that the loan process moves smoothly without any paperwork delays for you. We're already halfway through. If you are finding this information helpful and or interesting, please make sure to click and like the subscribe buttons down below, and you'll be notified when I post new videos each week about all things related to living in, moving to, buying and selling here in Yamhill County. Buyer tip number 6, shop lenders and explore mortgage options. One thing that many people don't know is that when you are shopping for a new loan, multiple credit inquiries within a short period of time will be looked at as one inquiry. So feel free to reach out to 2 to 3 lenders for comparison. If they pull your credit within a 14-day period, because they are for the same loan type, this will typically qualify as one credit inquiry. This gives you, the consumer, the ability to shop lenders and have each of them pull your credit to provide you with a breakdown of loan options, what interest rates they are looking at, what the closing fees will be, and what specific monthly loan payments would look like. One thing to remember, that just because a lender quotes the lowest fee does not mean that you're not paying for that lower fee by paying for it with extra closing costs. Having the full picture of the rate, closing fees, and final monthly payment all together need to be compared to show the full picture and allow for a more informed decision. Another personal preference to consider is whether you like to talk to the same person or if you're okay with talking with a team of departments. And I mention this because many online lenders will have a roadmap of departments that you work with as you progress through each phase of the loan process. So many times you'll be talking with 4 to 6 different people from beginning to end. This is in comparison to many local mortgage brokers or credit unions where they will have one specific person that you'll talk to for the full course of your loan process from beginning to end. Buyer tip number 7, get pre-approved. In today's market, where homes over the last year here in Yamhill County average 7 days on the market, having your pre-approval in hand ready to offer is imperative when you start looking at homes. In the market we're in, when you tour a home that you like, an offer will more often than not need to be submitted within a day. Offering on a home without a pre-approval is asking the seller, a complete stranger, to compare your desire to buy a house with a promise to come up with the money versus another buyer also showing desire to purchase, yet with proof that they have the financing to do so. Buyer tip number 8, find an agent to represent you. One myth we hear a lot is that a buyer believes they can just use the agent that has listed the house they are looking at to help them get the best deal. Now, it is true, yes, in Oregon, an agent can represent both the buyer and the seller, but the agent is still ethically bound to keep each party's information completely private from the other party. The agent, first and foremost, has been hired by the seller to not just sell their home, but represent their best interests and to realize the maximum potential of that investment for the seller. As a buyer, you want someone that will keep your best interests in mind when helping you to negotiate your purchase, guide you through the inspection negotiations, and the full purchase process. Many people do not realize that the buyer's agent is paid by the seller's agent at closing. The seller, at the time of their contractual listing, agrees to pay a commission to their agent at closing. That same contractual agreement also states that a portion of that commission will be paid to the agent that's representing the buyer that purchases the home. So having an agent represent you and another agent represent the seller is all paid for by the seller. Finding an agent that works in the area you are looking to purchase is also very important. Not only will that agent work for you and help you guide you through the process, But having an agent familiar with a particular area will be able to provide greater detail of information. They will be proficient in the specifics of the area market and neighborhoods. Some neighborhoods are definitely more desirable than others, which may require a very quick and aggressive offer, versus maybe another neighborhood where you find a home. You may still need to act quickly because we do have more buyers than we do have sellers and homes on the market, but you might possibly have the opportunity to sleep on it a night or two before putting together an offer and sending it over to the seller for their consideration. Your agent will be able to give you a picture of the market that you're looking at, the price points of the homes, expected timelines, and much more. Buyer tip number 9, know what you need in a house versus what you want in a house. In a market where there are considerably more buyers than there are homes, finding the perfect home may be hard, especially in particular price points. So understanding what you need, maybe a 3-bedroom and at least a small yard for a dog, for example, versus wants, 3-bedroom, a yard, granite kitchen tops, wood floors, and a covered porch, it's important to recognize the difference of the need and then the want. You may, in fact, find a home with all your needs and your wants, or you may find a home with your needs, but not the wants. When looking at homes, the biggest thing to do is always remember that homes can be updated for your wants. Cabinets can be upgraded, countertops can be changed, carpets torn out, and new flooring installed. But you can't change a 2-bedroom home to a 4-bedroom very easily, or add yard space to an already tiny lot. Buyer tip number 10, determine how much you personally can afford. Now that you're pre-approved, you'll need to determine how much you can personally afford. Just because a lender says you may be approved to $1 amount does not mean that that monthly payment is comfortable to you. Maybe you like to travel, like me, or maybe you've had an eye on a new car. These are things that you would need more money for above and beyond your house payment. Only you know what your full financial picture looks like, so figuring out what a comfortable monthly payment looks like, you can then take that information, talk with your lender to see what the purchase price looks like with that payment, and then talk with your agent to understand what the price points of the homes are going for in the area that you're looking. If the homes are higher than what you're wanting to get a mortgage for, then you and your agent can talk about possibly expanding your search out a little bit to other neighborhoods or adjacent towns. Having this information before you home shop is important because, as you will find once you start looking at homes, some homes will completely pull at you even when they're completely outside of your budget. So knowing what your needs are and your budget will allow you to make smart long-term decisions while not breaking the bank. As I promised, I do have 2 bonus tips. So bonus buyer tip number 1, do not try to time the market. It's completely impossible. 10 years ago, who knew that prices in Oregon would nearly double because of the demand and influx of buyers coming into the state? Who knew that the pandemic would not slow the market down, but actually instead increase buyer demand? The best time to buy a home is always when you can afford it. Real estate is cyclical. It goes up and it has years that it goes down. But historically, over time, real estate is a long-term investment with values that continue to rise. Bonus buyer tip number 2, if you have recently gotten a job after having graduated from college, the typical 2-year employment history that lenders require when getting a home loan may possibly be waived with your full-time college attendance used in lieu of the 2-year work history. And just like that, you're ready to start shopping for your new home. If you are looking to buy a home in the Oregon wine country, I personally would love to help you. If you are out of area and have no idea how to find a realtor, let me know. I have contacts all over the United States, and chances are I may have someone in your backyard that I can connect you up with. Now, what if you are looking to buy a home in a different town or a state than where you're currently living? Aha! Not a worry. Watch my video here where I talk about how to buy a house from your couch, where I break down how all of the steps of buying process can actually be accomplished virtually, from searching and touring homes all the way through to closing on your new home. I look forward to seeing you there. Bye.